Romberg and the Money is a rambling weekly stock market rundown where our hapless hosts discuss current events, tease out trends, and spread wild conjecture in an ever-shifting market. We are rank amateurs, and every word we say is the opposite of financial advice and should be completely disregarded. Romberg will react with juice, so please drink milk or water while listening to this podcast. Thanks. Buckle up.
Okay, hello. We're here.
Hello. Now that we've gotten the disclaimer out.
So, today, here's what we got. So I was looking, I follow the TQQs and the QQQs. I'm a tech guy. I like the Nasdaq stock market index the best. And that's what I tend to trade in. The future is not in bulldozers. The future is in technology. So here we go. So every week,
come back.
You can sell as many Caterpillars as you can, and until they have electric ones made by Tesla, I guess there won't be any real big plays to be made there, except in cyclical trading.
You heard it here, folks. Elon Musk is making new bulldozers.
There you go. So, anyway, today was, actually today was not a bad day. You're looking at the QQQ charts that I have my own chart setups, of course, and this is my particular strategy I like to play with. I tend to always run long channels. These channels go back in time, usually 5 years, or the entire length of chart that I have available to me for a particular symbol.
You have some pretty bad wind noise there, Jim.
God dang it, stupid wind. Yeah, that's what happens when you live in Hawaii. Wind comes.
Oh, no bummer.
How's the wind noise now?
Non-existent, perfect.
Oh, perfect. All right, well, if there's ever a good blowhard to be had, it's me, so be ready. So you can see with the blue channel lines that we're still in an upward trend. You can also see that based on that trend line that, this is the way I like to perceive this, is that these values down here are values that are in an overbought market, or oversold market, sorry. So I but you never know how far something will get oversold. They can go pretty far down before they decide they're going to run back up again. But the strategy that I like to employ is just keeping the channel. As long as my channel is on an inclination, then I'm usually a pretty happy camper. I always try to keep money in the background so that I can always like to keep about 25% of my portfolio in cash, so that I can take opportunities when these things start to really blow over. And as they dip down, I'll buy into those dips. You never know where the dip ends, so I always do it incrementally every 2 to 3 days or once a week, depending on what's going on. Anyway.
When you're talking about keeping 25% liquid asset, just cash in there for buying dips, how do you kind of do the opposite then, where if something is in the overbought territory up on the top, you start selling off every 2 or 3 days to rebuild that cash kind of war chest?
No, not normally. Generally speaking, I build my war chest of cash on losers. So if I have a losing position, I might decide to take a position. I might sell it off to incur the loss and gain the capital, because in overbought territory, the same thing applies. We don't know how far overbought something will become before it wants to correct. So I like to sell off the losers and keep buying on the opposite side. This is my particular strategy. And because I honestly, the other part of this, I guess, that no one knows except you, is that I usually don't buy a lot of actual stock. trade.
Right.
Options, more than not. And I rarely am selling on an uptrend. I'm rarely buying these stocks. I sell puts up here or down here, and sell calls rarely, but once in a great while, if they get really steep on their inclination, like this inclination from this point here to here in a very short window. That's a pretty steep climb, and correction is inevitable. We blow into the oversold, but you can see that it drifted around up here for a while and made a new high before it actually wandered back down again. So that's just kind of my strategy. That's kind of what I do. I keep parabolics, which kind of give me an idea of how the stock is trading. But I don't know. This is a lot of detail.
So
maybe
this is fairly high detail.
Yeah, maybe we just stay with the program. Right now, I think the market is solidifying. I think there's a lot of volatility. I'm not worried about it, and I think that the long-term trends are all intact, and that we've been due for this correction, if you want to call it a correction, for quite a long time.
Yeah, it's almost even hard to call what we're seeing right now a correction. It's really just like a pace slowing down. We're not into that fall stage. It's just, oh, well, that was maybe like a bit quick on the rise, and it's just going to go horizontal for a while.
Yeah. So I'm good on the tech. You can see we have
top 100 financials. How you feeling about your FAS today?
Yeah, so I also trade the FAS, which is a financial ETF. It's also a triple leveraged ETF. And actually, I feel good about the financials because, if you go back and look historically in an inflationary market, which we have some inflation right now.
Some inflation, he said.
Yeah. So we have some inflation right now, but as long as there's no recession word mentioned.
Don't even say it. It's cursed just to mention it.
I know it. But it actually can be beneficial to the bank stocks. They can make money in a light inflationary market without.
Inflationary. Yes.
Yeah. As long as people can keep paying the bills and keep paying the higher interest rates, they pick up a few tags on that. So. I mean, I think that we have a very solid direction on financials. They all look really, really great. I wish I had a chart for that right now to show you, but I don't.
Next week, we'll do financials.
But they're all green. I have these little indicators I wrote the code for. Basically, it gives me a really quick look at what's happening in the really short term, kind of the midterm, and then long term, meaning across the spectrum of these are averages that run 50, 100, 200, and then we have 20, 30, and 50, and then we have 10, 15, and 30. So these kind of tell me like what's going on in the short time at a really quick glance. So right now, this is a downturn. This is how we play it out.
Is that what that is, Jim? Is that steep red drop off there a downturn?
Yes, I think so. It could just be the scared people running away. My brother does this the best. He buys high and sells low. So he's actually my advisor. He calls me when he's going to do something, and then I do the opposite thing. Kind of like we're telling everybody else, right?
Yeah, do not do what we're suggesting right now. This is
not
financial advice.
Do not do what we do, because that's pretty horrible. The financials, though, all these lines up here are in the green. They're measured the same way. I could probably.
It's fine. I guess the only thing that I'm wondering as far as theory crafting goes, and we'll have a whole outlook section kind of towards the end of the show, but as far as like the Fed's influence on this. There was some chatter a couple weeks ago when they were talking, oh, is the Fed going to increase interest rates because of inflation fears? And they're saying, okay, well, maybe financials are going to do really well on that. Is that something that you think is like a valid take, or is it not really going to be that impactful on financial markets?
Well, how should I put this? So, I don't know. I've been doing this for a long time, and people will probably hear this and go, ha! I don't think so. You sound like an idiot. But my take on that is simply this: with the stock market, I have this overriding theory. I don't like to listen to the news very much. I'm not a short-term player, so I don't I don't buy or sell on news. I buy or sell based on other kinds of things. But when it comes to the Fed, so this is where it falls into the Jim Howe version of bad news is bad news, good news is bad news. And it just depends on where the market goes, and all news is bad news. I mean, it can go that way, or all news is good news, no matter whether it's bad or not. So last week I was thinking, maybe the Fed should say, hey, we're going to tick interest rates up a pick, because, the financial markets will probably go, ooh, that's okay. That's pretty good. All the stock buyers out there are so worried about that the Fed might do a thing. They've already taken the money out of the market. They've already accounted for it. So then the market oversells. And first they're worried the Fed doesn't do something. Then they're worried that the Fed doesn't do that does do something.
Too much, yeah.
I know. And it's like, so you can't play the news game. It won't work in the end. The markets do respond on a day-to-day basis to those kind of remarks from people, but they always migrate back after people think about it for a little bit.
I think half the time what happens is the Fed or whatever major influencer just kind of floats an idea out into the media to see how people react, and then they make their decision based on that. It's not necessarily that they've made that decision in advance. I know that's kind of tinfoil hatty, but that's how it feels at times.
Well, you gotta remember that the Fed really, I know that people could say no, but the Fed does not respond to the stock market. It doesn't care. It does, but it's really not its primary goal. But it does like to float its balloons. But the market will. The interesting thing is the market will respond whether they do something or do nothing. In both cases, the market's going to read something into it and respond. So that's why I don't really spend a lot of time focused on that level of news on a day-to-day basis. But I'm certainly interested if the Fed's going to raise rates. It's going to, because it does devalue equities, But how much? Who knows? Because if the equity's already over bought, then it's already too high anyway. So if the Fed lowers the rate and it goes down, everyone goes, oh, look what happened because the Fed lowered the rate. Well, it was bound to go down anyway. Question is how much the Fed action had to play and how much it went down. So.
Like, how legitimate do you think some of these inflation concerns are? Like, at what point would you say, okay, well, maybe this is getting out of hand, versus, okay, this is just kind of normal rebound or at least tolerable rebound from the lows of 2020?
So first of all, inflation, is it? Yeah, it is, and there's no doubt. You can call it.
The consumer price index has gone up.
You can call it. You can call it transitory. You can call it what you want. It is what it is. The transitory part, though, is the bulk of this has. Anyone who didn't see this coming is crazy. When you have a year behind you of COVID, and you have factories, mines, things shutting down. They say, okay, essential businesses keep going. But that's not really how it works. And and even the ones that are essential are under heavy scrutiny. They're under rules and regulations.
Right.
I mean,
They're
just
running it at a hamstrung capacity.
exactly right. Exactly right. So shortages were in an inevitability, and
Like the
shortages create.
silicon
Yeah,
shortage is huge right
exactly. So all those shortages create, inflation, and it could be short term, and it probably will actually. I think it'll last until we're back, not just fully open, but after we're fully open. I think it's going
now.
to take another six months to a year to get productivity back up to where it was.
Especially like what's it? Durable goods, I think is what they call it.
Yeah.
Like you actually need bodies, places like those. I think are going to be the ones that are going to take the longest to get back.
Well, the federal government's going to really be the benefactor because, as many people in the past have pointed out, that inflation's the hidden tax. So
Right.
the government gets to pay back its debt with money worth less than it borrowed it for. they got more product
Mileage out.
than you get. So yeah.
So you mentioned you kind of want to talk about crypto. So what's your take on crypto, especially
Okay.
last week, seeing
So
everything bloodbath.
So so we're wandering off on crypto, and I have a lot of friends and family who have been buying that stuff. So
As a side, all of our friends and family have crypto. We don't hate the crypto.
Yeah.
That's not where we're going with this.
Let me put it this way. If I have a blank piece of paper I just picked up off my desk and I give it to you and tell you it's worth $10, and then somebody else found out I gave it to you and they offer you 20, and then you think, well, if I tear it in half and I can get 20 more, what a great idea. The only problem is at the end of the day, all you have is a piece of paper with nothing on it. And I don't understand crypto at all. If you send people into a mine to take gold out of the ground and sell it to the government or to wherever, there's a real tangible thing that comes out of it. And the tangible thing is the gold, and it can go into the vaults at Fort Knox, or it can go into your ring on your finger, or into the computer that you buy. And so there's an intrinsic value that comes with the creation of things that are in short supply. But short supply of a digital object is crazy town to me. I'm sorry, I don't get it. From my perspective, the regulation you see people starting to do was an inevitability. No government on earth is going to willingly just allow another form of currency to exist.
Exactly. That's the thing. It's like forget whether or not you understand how it's a limited resource or how the trading works or how mining or security, forget all that. At the end of the day, what happens is if you have a blind anonymous currency that can be traded digitally across national boundaries, the powers that be are not going to tolerate that long term. It just will not be allowed.
I think you just seen what happened. People think that this stuff is also, even if you believe in it and think it's the future, and maybe it is, and I'm just a dummy and I'll lose out in the end.
Well, I think it is the future. I think that there's going to be a really tumultuous phase, in the short to mid-term there.
Well, so
I'm not saying Bitcoin specifically, but more digital styled currencies. Whether it's a state-owned one or not.
Personally, I think the only ones that are going to end up surviving are the state-owned ones.
Yeah.
Not the private ones, unless the private ones are like the equivalents of a Macy credit card. Here's my Amazon coin, and you can spend it in Amazon, but you can't spend it somewhere else.
Yeah.
You know what I mean? It's kind of like having that credit card and getting that. But the thing is, I heard somebody refer to them as like pet rocks, and that's kind of my viewpoint is that you can't. I understand that blockchain as a technology comes with a great value, but it's how you turn that value into something that is recognized by everybody. So right now, I mean, it's like Dogecoin. It's like Dogecoin. Where can you go spend it? Nowhere.
Well, see, I think that's the interesting thing is like when you're talking about these like Bitcoin, Dogecoin, which I can't say with a straight face. Like the use case is it's a vehicle for someone else's currency. Whether that's dollars, whatever. Like we bought in with some other currency, we're using that as a transitional currency. Whereas you were talking about like what's the use case for blockchain? And I think that was the interesting kind of proposition behind Ethereum was that they were actually building like contracts. They were using the blockchain that was supporting the currency for all these other projects that were then kind of built off of it. And you're still seeing some innovation in that today. I assume probably actually more innovation in that today. So
yeah. Well, I mean,
there is a use case. I just think that right now everyone's like, oh, it's free money. You buy Dogecoin and it's worth more tomorrow than it was today. What could go wrong?
Yeah, no. So there's I don't even know how many of these there are. There's I can go look at 50 to 60. There's probably there's hundreds probably of these things in the universe, and it's like there's there'll probably end up being more of these. I mean, I don't understand. I mean, who's going to guarantee it's worth anything ever, other than some other guy who might be willing to buy it from you for something somewhere? I mean, there's no government guaranteeing your money. If I go put my money in the bank, I'm protected by the SEC, by the the savings loans and the banking insurance companies. My money is always guaranteed and promised to be worth something, but who's promising to make cryptocurrency worth anything? Nobody.
I just looked this up in the background. There are more than 7,800 different types of cryptocurrency in circulation today.
There you go. Probably more than there actually are countries. So good luck.
You're here to hear first, folks. There's probably less than 7,800 countries. If I had to guess. Oh my God, you're killing me. All right, so we kind of already talked about.
I don't want to tear those people down. I'm not here to judge other people and their investments, but man, I just don't get that one. That's
at the end of the day, like I'm sure a lot of them are laughing their asses off. People who bought Dogecoin back when it was pennies and whatever they sold at, or if they're still holding it, even they've made a killing hand over fist as long as they get out before it crashes. But there's always that asterisk is as long as you get out before it crashes.
See, and that's the
holding the coins at the end.
And you nailed it. I mean, that's the thing. A pyramid scheme is a pyramid scheme, and you could be the guy that bought it for 1 penny and now it's worth $1, and you made 1,000% on your money, and you're rich and you got all these millions. But you don't have them until you sell it and get out of it, right? And as soon as the pyramid starts to collapse, it accelerates pretty rapidly because the people at the bottom, it's kind of like the short squeezes, If you're the guy at the top of the pyramid, you're making bank, right? And you can afford for that pyramid to collapse 50%, you're still making bank. But 50% of the people that bought in while you're up there at the top lose all their money. And guess who's getting it all? You.
So moral of the story is be at the top of a pyramid scheme.
That is the moral of the story. If you want to have a Ponzi scheme, make sure you're at the top of it.
Yeah. Financial advice. Solid.
Financial advice, yeah. And pyramid schemes, yeah. Always be at the top of the pyramid.
So we've kind of already talked about outlook a little bit. We were talking about like the tech outlook for like the next week. What if anything are you going to be keeping an eye out for as far as like maybe support ranges? Or I know you're not like a huge news headlines person, but what would kind of pick your interest in the next?
Well, on the TQQs, I mean, if I'm going to pick support and resist lines, I mean, you're not going to see them right here. But I mean, this one's pretty close. I mean, I could see the QQQs, you know. So this little window here I have here, this is called um, uh,
It's your
it is
shot.
it's a probability cone is what it is. And these probability cones they drive off of a 50-50 ratio and then action and some other information, that goes into deciding what that window looks like. So if you're in the QQQs, our current level is 327.01. So the downside on the next week, could literally be as much as go down as much as whatever this line is here, 3,100 and I don't know.
It's like
So,
3 or something.
yeah,
3130-ish.
yeah. And up here, it could be as high as 340, roughly. So, it kind of gives you this is how I view the market all the time. I look at my trend, I look at my cone, I try to see what the price action looks like and what the support lines are, and these are my old support lines. So they kind of jive with the cone actually. So that's how I play it. So because I always try to keep the cash, if it comes down in here and bounces, so if you see, I wish I had it. Let me show you a different thing here. Let's see. I look for little signs. I'm a chart guy. I'm not really, focused on individual companies or PE ratios. PE ratios are kind of a weird thing. They mean something, but in the trading market, blue sky, there's no way to define the blue sky value of a PE ratio. So there's only kind of some norms. But I'll look around for like this little deal right here. I wish I had a circle or draw a circle. I'd be looking for.
We can do this week, Jim. Also, we're still looking at your screen art here, so your clip.
Oh, right here?
Yeah, we're still looking at the clip.
Yeah. I'm sorry, I can't do the clip edit. Anyway.
No, don't worry about it.
Yeah. The thing is, I would look, like this is called an inside bar.
Yeah.
These two. So, I kind of try to keep track of all the little technical pieces and options, but inside bars are typically kind of the market's telling you something about what's going on. You've had some selling, then you had some buying, and then you had this deeper sell. And the next day it bounced back up and it stayed in the inside range. It's telling you, if you look at these inside bars, like this particular one was telling me that the market kind of wanted to go up a little bit. Because
the bears have kind of run out of steam there.
Yeah, the buyers on the second bar here, they kept trying to push it down, but they came back in and kept pushing it back up, and it kind of just left it in this little center mode. And it could have went down, but the setup looked to me like an upline setup. So I don't trade those, but it tells me that maybe if I am buying this dip down in here below the channels, that now might be a good time to do so.
Yeah, your window might be closing.
Yeah, and then you seen it came down and played the game again and tested that bottom line here. By the way, this is a 200-day moving average here.
Right.
So, but when it closed, it went down, it touched it, and it went way back up and opened and closed much higher. So that told me that setup says, okay, I'm heading up now for a little bit. So right now I think we're in an up mode. Up, it's going to be up to, I call it an upward bias.
Yeah.
But there could be some volatility along the way.
Always and forever.
Yeah.
It's kind of the same thing we talked about financials already. The question I'm going to ask you every week is this the week where we buy gold?
Ironically, if you looked at the gold prices, I think you'll see that even when the inflation, everyone is screaming inflation and getting all scary, well, and pushing prices down up in here, you didn't see the price of gold really go up that much.
I didn't see too much movement in it. I picked up some then kind of as a joke, and it's up 3.5%. So there's worse things I could have done with it.
Yeah.
Yeah. So not yet, but keep an eye on it.
The thing about gold is that, in some ways, a lot of people say it's like cryptocurrencies. The problem with gold is you don't know what there is an intrinsic value of gold, and you can go research that and find out what that value is. And there's the cost.
This a couple weeks ago, like, oh, should we be talking about like silicon, like the actual,
Yeah, right. Well, actually, right now, some people, and I've been watching also the markets for commodity markets for materials, because if you're a short, I'm not a short-term trader. If I was, I would probably have bought some of those materials stocks because they offer some participation in the inflationary pressures that are driving prices.
Yeah.
And so, those companies are making, they're pushing their prices up to make money on the scarcity of their product. Right. And even though there is a threshold they have to be able to produce to be able to stay afloat, there's a little window in there where you can gain some appreciation. It would be a kind of a tricky market to navigate, but if you're a person that really likes materials, and they've done really well in the past,
you're particularly well informed about them.
Yeah, maybe that's a spot.
All right, and then we've got a couple off-the-wall topics we were talking about as far as not quite stock market news. China landed their rover, so that's exciting.
Yeah.
We've been flying a helicopter around, so it's real cool that you landed a buggy. But we've been flying for a minute now, so
I like
that's all I'm saying. USA, etc.
Yeah.
There was a headline from the World Health Organization that says that 55-hour plus work weeks are, quote, a serious health hazard. So if your boss has you working overtime, Jim, stop that.
Well, you're talking to Jim, remember? I don't do day off. I don't even do day off very well.
No. When's the last time you've taken 2 consecutive days off? Take your time.
I don't know. Maybe tomorrow.
Oh, wow. Hey, well, fingers crossed for that one.
Yeah. Well, anyway, this was a rambling Romberg. That's all I can say. Yeah. So.
Well, it was fun. Thanks for listening to episode 1 for anyone that happens to do so. I'm so sorry for your loss of time, but hopefully you got something out of it.
All right. Well,
thanks, Jim.
Yep. I'll talk to you later.